All right, I think we should start. Good evening, good morning, and good afternoon, everyone, wherever you are. I'm in London, and we have the pleasure today to welcome Misbah Naqvi and Kalsoom Lakhani on our panel today. They are co-founders of I2I Ventures. I2I is a $15 million seed stage VC fund for Pakistan. And it was launched by Kalsoom Lakhani and Misbah Naqvi in 2019, and they'll talk a lot about it because that's the whole session about. Misbah is one of the co-founders and a GP of I2I Ventures, and she has over 20 years experience in global finance and development and fintech and impact investing. And she has worked across a number of roles, including Citibank, a fintech based in the US, where she expanded to various markets across Asia and Middle East and Africa. Kalsoom is another co-founder of I2I Ventures. Before that, she was the founder of Invest2Innovate, and she'll talk about the two sister companies. Invest2Innovate was founded in 2011 to support and unleash the potential of young entrepreneurs in growth markets like Pakistan. She is now also a co-founder and general partner in I2I Ventures, which we will talk about in a little bit of detail. She has trained young entrepreneurs and change makers across different countries, including Pakistan, Ukraine, Kazakhstan, Bangladesh, Ireland, Cambodia, Kosovo, Nepal. And she speaks at a number of venues, including World Economic Forums, Aspen Ideas, US Chamber of Commerce, US State Department, Global Entrepreneurship Summit, and Global Entrepreneurship Congress. Kalsoom is currently a non-resident senior fellow in the Atlantic Council and a member of American Pakistan Foundation's Leadership Council. Welcome, Kalsoom and Misbah. One thing to mention, I think it's also a great honor for me to mention that this is the first women-led VC fund in Pakistan, and probably the only one at the moment. So over to you, Kalsoom and Misbah, to go through what I2I Ventures is, and we'll then go through our topic today, which is data-driven investment decisions in Pakistan.
Great.
Over to you guys.
Thanks so much for having us, to the Pak Launch team and to Ali, but Hamad, thank you for moderating us today. And thanks for everyone for spending part of your Sunday with us. Misbah, should we start with maybe telling a little bit about the journey to I2I Ventures? So as Hamad mentioned, everybody, the story of I2I Ventures, we are raising our $15 million fund. It's a targeted 15 million. But the journey of the fund, as Hamad mentioned, it opened in 2019, we opened the doors to it. But the journey of the fund has really been informed and grounded by the work we've been doing in the startup ecosystem in Pakistan for the last 10 years. So based off of the company that I founded 10 years ago, Invest2Innovate, or I2I. I'll share my screen, but I think what's more important is just to understand why we launched a fund, because I think there are so many funds that are coming up now in the startup ecosystem in Pakistan. And I think for us, I think we're a little unique in terms of our experience for both Misbah and I, and as well as how much of it is grounded in the realities of the startup space. So as I mentioned, I founded Invest2Innovate in 2011, and back then the startup ecosystem was very, very early. There wasn't much happening back then. We launched our startup accelerator program in 2012, which was the same year that PITB launched Plan 9. So them launching this very large incubator program, we obviously were launching a smaller accelerator, but speaking to the market and having watched it really close up, having grown our accelerator program and beyond, I'll just share a quick graphic of what that impact has looked like, because we just shared that. I don't think I can, I can't share my screen. I can't share screen. So if someone can enable that, I can do that. But just to let people know that our flagship program that we have done, basically, thanks for letting me share the screen. Our flagship program basically allowed for us to graduate about 50 companies over the last 8 years. But beyond that, sorry. Can you guys see this? And I'm just trying to see if I can make this present.
Yeah, I can see that. So it's
presenter view. All right. So basically what I think was good from our side was that beyond our flagship program, which graduated about 50 companies over the last 8 years, and we've worked with companies like Sehat Kahani and players like, ProCheck that received investment from Sarmayakar, Dot and Line that also received investment from Sarmayakar, and a number of players that have since grown and raised funding, Eco Energy, from our first batch. But what I think has been great is that we've gone beyond our flagship program, which was something that we ran every year. But because of us kind of becoming quite successful at working with entrepreneurs, we then started to become partners with Facebook, the World Bank, and have actually trained over 1,200 entrepreneurs now, not just in Pakistan, but in the region. We've also trained over 40 incubators and accelerators in Bangladesh, Nepal, Cambodia, Vietnam, as well as throughout Pakistan in terms of building the capacity of other programs. As Hamad mentioned, we also do research, which is actually the topic of today. And actually about 4 or 5 years ago, we started to build out a research arm of our work called Insights. You can see some of the thought leadership that we release, but everything from an open source deal flow tracker that talks about every deal that's happened in the market over the last 5 years to present. You can access it for free. It'll tell you basically the amount that's disclosed, the investors that were involved, the sectors, things like that. And all that to say was that work in itself, the research that we'd been doing, as well as the hands-on work with entrepreneurs, really informed and led to us deciding to launch our venture capital fund. It wasn't something that we didn't come from that traditional finance background and decide to come in to Pakistan and do it. We were operating in the Pakistan market and decided to design and build a fund that was really based off of the realities that we were seeing in the market, which was that there was an early stage capital gap that continues to exist, particularly at seed and pre-seed stage, that the type of support that entrepreneurs really need and that we saw so many companies die in Pakistan was not only really good terms, but also seeing that they needed really hands-on support. And we use our research team to be able to provide that. But I'll let Misbah also weigh in, and based on her background, as well as, this kind of speaks to our impact on our sister entity, because they are separate entities. They are not the same, and it's something that we have a symbiotic relationship with. It's something that we leverage. But Misbah can share more too, as well as how that's informed the fund. And then also, Hamad, later we can talk about some of our overall data that we've gathered on the ecosystem as a whole and how that's informed us and our decision-making at iVentures.
Yeah, and Kalsoom, as I talk about it, could you make this slideshow, please, so that it's not presenter view, because I think it'll become a little bit bigger for everyone to see. Thanks. So like Kalsoom said, everyone, first of all, Assalamu alaikum, and thank you for spending your afternoon, morning, or evening with us on a weekend. This is an area that we're really passionate about and happy to take time out for, so really appreciate that all of you are here as well. I think, like Kalsoom said, all of the work that we've been doing with Invest2Innovate informs why we've set up I2I Ventures, but also informs how we work. So I think for us, it's very important for us to be founder first, and that we always tell people that talk about our work, do not take it from us, but actually talk to our startups that we've invested in to really understand how we work with founders. And we'll again come a little bit more to that, how we look at data when we're actually working with the founders and our insights team. But I think I've been on the board of Invest2Innovate, on the board of advisors, since Kalsoom started this a decade ago. And as somebody who's been involved at a high level, but at an operational level, I've also had a good vantage point in terms of seeing what is actually happening around I2I in the ecosystem. And I think it's been a lot of hard work to get us to where we are today, with not just I2I, but other players like the Nest, like the NICs, which also came in terms of support programs a few years ago. And I think, like they say, it takes a village. So it really has taken a village to get the ecosystem to this point. And I think some of these statistics speak for themselves in terms of the role that I2I has played. But that's also why we are different. And what we aim to do with I2I Ventures is to apply all that we know about founders, about Pakistan, and about how difficult it is to operate in this market. Very often entrepreneurship is glamorized, and people talk about being in a startup as really cool, or raising funding as really fun. And while there may be aspects of that are fun and cool, there's a lot of hard work that goes into it. And I think for us, operating in a high friction market like Pakistan is actually has given us the tools to be able to now help the founders that we invest in to then grow their companies in Pakistan as well. And we'll come to some of those tools and how we use data to do all of that a little later. Hamad?
Sorry, I was sitting on mute. That's very interesting. I think that's the essence of today's talk, where we really want to see what data do I have collected, and how do you guys use to build a better reading of the ecosystem, because we do talk about quite a lot, especially on this forum, about Pakistan's ecosystem and how things are changing, and this is an inflection point. But how do we look at that inflection point from a data perspective? Because you guys have been collecting this for quite some time, and you have trained quite a lot of entrepreneurs, which have then gone on to be seeded, to be funded by other VCs, and then you started your own VC fund as well. So looking at things, when people talk about inflection points, and this term I've heard, and many people, including yourself, must have heard for, I think, like a lifetime, it feels like, but whole of last year. So what does that inflection point mean from a data perspective?
That's a really good question. And just as a quick background, even on myself, I actually started my career as a researcher. So I get really geeky about good data and good research. And one thing that I think is really lacking in Pakistan is data, right? Like, it's something that we either data is not available, or it's siloed data. So it's not stuff that we can find quite easily. So even as we were building our research team, as we were building this deal flow tracker, which also, we used a lot of that data for the ecosystem report that we released in 2019 with the World Bank, and we'll be releasing a 2021 version of that. So we created analysis as it related to the data that we did. What I think was really important was that anyone can say that they want to collect data, but in Pakistan, and as is the case in most emerging markets, it really, really requires you to actually have the relationships in place to actually check a lot of the data points that we're seeing. If we were to only rely on third-party sources, we may not actually get the most accurate data readings. And I think what was important, even for our research team, is that every single data point that we have in our deal flow tracker has been triangulated. So it means that if we looked at a third-party source, it means it's been checked with the investors that were in question. It's been checked with the startups in question, so that everything was really heavily looked at from a methodology perspective to make sure that the data that we have is as sound as possible. So that's the real qualification that I want to put first, is that so people understand, and something that we all know, right, is that data doesn't exist. So everything that you're creating is actually creating it for the first time in a lot of ways. So that tracker was this labor of love that we did in-house at Eye to Eye on our insight side to do that. So Miss, do you think it would be helpful for me to kind of give an overview about some of these points? So
and I think to Hamad's point about inflection, why last year was an inflection point, and this speaks to that.
Yeah, totally. So what's interesting, if I was to zoom out really quickly, if we were to look over the last 5 years, and if you look at the graph on the left, the top left corner here, if we were to look at this, what's really interesting is that 2015 seems like it's the year that is to beat, but actually we call that the outlier year. It's not a vintage year in terms of companies that, we'll see grow over time. It was more of an outlier year because that was the year that a lot of classified related companies like Zameen, Naseeb, all raised funding. And that was mostly from players like Vostok and players that were specifically looking at the classified space. So it's an outlier because it's a trend that we see in other emerging markets that classifieds tend to get funding first, but it's not something that reflects an overall, just because there was a major dip that happened the year later, it's not necessarily a negative trend. So over the last 5 years, so from 2015 to present, companies in Pakistan have raised over $200 million. But to the inflection point part of what Hamad was mentioning, that acceleration has really happened in the last 2 years. So we've really seen over half of that amount happen in 2 years versus the 200 million that's happened over 5 years. And what's also really interesting is that our research team last year at the beginning of COVID, so literally a year ago now, we immediately did a survey of 100 companies in the ecosystem to get a sense of the potential impact of the pandemic on the space. And at the time, it seemed very, dismal, because obviously a lot of companies that were raising funding, they didn't have enough runway. There was a concern as we looked at global figures that VC funding would actually decrease. What you can see in the graph here is that we actually increased funding in terms of the VC amount of funding that was raised by startups actually increased from 47.7 million to about 65 0.6 million. And that's, we've seen some numbers be slightly higher by magnet, but for our methodology, this is what fit based on what we were able to collect and also just see what was disclosed. It was also 48 deals versus 32 deals. So what's really interesting there is that the quantum of deals is also increased. We also saw the first Series B happen since 2015. And again, 2015 was an outlier year. So I would see the Baikea Series B investment more of an indication of a potential trend rather than what happened in 2015. We can talk more about specific trends within this, but I think what's interesting when we think about the inflection, to Hamad's point, is that also, as much as we're seeing the acceleration of deals happen, the quantum of deals increase, we're also seeing the sectors also be very specific. So even though the pandemic was obviously something that impacted a lot of businesses, particularly those in the marketplace space, players like in the mobility space, what was really interesting is we saw something like Dukan Tech take off a lot, right? So players like Bazaar, but also players that operated around that, right? So Dukan Tech as a whole raised about 17.6 million last year. So we saw a lot of spaces that were not only not impacted by COVID or were quote unquote COVID proof, but we also saw an overall leapfrogging that happened because the digitization that was forced by the pandemic, where we're not necessarily seeing a full snapback the way that we originally thought, but we're seeing an overall acceleration of the space in terms of people digitizing and becoming more comfortable with digitization, right? So and maybe Miss, if you want to maybe then talk about what this means for us as a fund, but the last point that I'll make on this, right, is that it also starts to inform, like as international investors are looking at Pakistan. So we saw in 2020, international investors put $44 million into Pakistan, which was a really big high. And what I think is really interesting, we've been speaking a lot about this, is that the more that we see companies that come up in mirrored spaces, so Bazaar, Retailo, Jugnu are all things that we see reflected in Indonesia, in India, in the Middle East, right? So we oftentimes will see international investors be more comfortable about coming into a deal where there is a sister version happening in a market that they've already invested in. So I think we're seeing a lot of international investor attention in very select spaces. So the Uber for trucking space as an example, the fintech space. And so I think we're going to see that activity also accelerate, which is also quite interesting and also informs our strategy at the fund.
I think that one is an interesting point. So I'll interject here and talk about, there's also a question around it as well, that which country is Pakistan closely aligned to when it comes to growth and user behaviors. This aligns to the point that you are making, that investors internationally look at what is happening across the regional countries. And then I would just ask a question of, what do you think are the trends going to be in 2021 and beyond, looking at those regional players?
Misbah,
yeah, and I think one of the things that startups often do is start looking at India first. And I think that's natural because there's a lot of similarities in culture and the composition of the population. But we also have to recognize that India is much further ahead of us than some other markets in the space that are in the region that are actually closer. And Indonesia would be one of them, where I think the Indonesian ecosystem has really sort of grown exponentially in the last 5 to 10 years. And actually, Pakistan is much more closely aligned to that kind of trajectory than we are to India's. India's obviously has, hundreds of millions of dollars of funds and a very competitive market. So I think for us, when we look at markets that are relatively similar in terms of the trajectory, I think Indonesia is definitely one of them. In fact, if anything, we're starting to see application of models that have worked really well in markets like Indonesia now come to Pakistan and kind of be adapted for the Pakistan market. And I think in terms of trends, we're going to see more of that happening because there's an acknowledgement that we're following the trajectory of these markets in terms of investments and the investment space heating up. But I think there's also an acknowledgement that some of these models in Indonesia have worked really well for a population that's similar in size to Pakistan and actually growing in a similar way. So I think all of that comes together. And Hamad, to go back to your inflection point also, if we look at where Pakistan is today with the growing youth population, almost 90 million smartphone users, relatively cheap data packages and access to data on your phones, along with the fact that it's a large population, 5th largest market in the world, we see that this is ripe for a lot of exponential growth. And that's what we saw in Indonesia a few years ago as well. So that's one of the markets that we track closely. Of course, there are lessons to be learned across different markets beyond that as well. India being one of them. The Middle East is also one, although Middle East as a cluster is a bunch of diverse markets. I think Egypt is similar to Pakistan, and especially in some sectors like mobility and Dukan tech, which we're starting to see happen in Pakistan as well. So there are definitely trends that not only us, but others are tracking. And looking at Pakistan. And I think to connect that to the point about international investors, what ends up happening is that international investors have a great vantage point because some of them may actually have invested in some similar companies in these other markets. So they can actually see the path a few years down the road, or at least let's say a few rounds of funding down the road for startups that may be coming up in Pakistan. And so they're also able to sort of make that call based on where, like, you know, where a Baikia could go is possibly shown by where Gojek has been able to sort of grow in the region as well. So there is that aspect of looking across the region and then applying those lessons to Pakistan as well.
I think one other market that beyond, I think, Indonesia, and then also to Misbah's point, Egypt, I think is also quite, as we mentioned, is quite interesting, and we're seeing a lot of similarities. I think one market that's actually not only similar, but where there could be a lot of potential collaboration and also crossover is Bangladesh right now for many reasons, right? I think Bangladesh is leapfrogging past us economically from a macro standpoint, but I think where the ecosystems are, they're actually at quite similar inflection points. So Bangladesh has had a lot of startup activity, and where a lot of players from Southeast Asia are coming in, and there's a lot of potential collaboration with India that we don't have the ability to do. But I think unit economics and the way that like the markets operate are actually quite similar. And so even when we're looking at models in Pakistan, we'll also speak to our partners and our friends in Bangladesh. And so for me, fun fact, my mom is Bangladeshi, so it actually is a really interesting vantage point because I've been part of helping out in the startup ecosystem there for about 5 years now. So it's been really interesting to see where we've gone past, where we're further out from Bangladesh, but also where Bangladesh is further out from us. And so similar markets where I think the potential for scale of Pakistani startups to that market and vice versa is also a potential for us to explore.
Okay. I'll again interject here with a couple of questions that could be related. You mentioned the markets. You mentioned Bangladesh. You mentioned other regional markets. You mentioned Indonesia. But let's stick to Bangladesh, for example, and its ability to collaborate with India, and hence, from an investor's perspective, could be a greater buying out opportunity, exit opportunity, etc. So their valuations could be higher. Do you think this kind of thing is a challenge for us? Do we have any partners such as this, like China, which the investors see?
Yeah. Miss, do you want to take it first?
Yeah, I think, so I think the question of exits comes up quite often, Hamad, and I think China does feature prominently because I think with the development of CPEC and this corridor that Pakistan actually offers, Bangladesh obviously does not have that. So we do have this potential opportunity with China. I think what's important for us is to see where these companies are growing in these stages, to get them to the point where they could potentially be an acquisition target for players looking to come in. We've often seen in these kind of markets that players outside find it much easier to actually acquire a company that has some traction, that has users, and then absorb it and then grow in a big way. We've already seen two early sort of forays into the Pakistan space from China, with Ant Financial, with Telenor Bank, as well as with Daraz and Alibaba. So I think we're going to start seeing more of those. There's definitely an opportunity for Pakistani startups to position themselves for those acquisition plays potentially in the future. I think there's also, as the CPEC sort of corridor gets built, I think we should also keep an eye on what are those ancillary industries which can actually benefit from the larger infrastructure investment that's actually coming into the country. And therefore, what are the businesses that could be built around it? So we're talking about ancillary services, and other sort of allied industries that I could actually come in. So I think there is definitely that opportunity. We're already in conversations with certain players in the broader Far East and China that could be interested in companies that are in Pakistan right now, potentially starting to, not maybe even from an acquisition perspective, but just as an investor, coming in as investors into later rounds of funding, because they may have had those kind of experiences in the space. So I think China is definitely there, and beyond China, I think there is also opportunity opportunity in the Far East to look at potential collaborations coming in from there.
Yeah.
I think one other thing to keep in mind is even from the Middle East, we see funds and companies. So the Middle East being a small market, often startups are looking to go beyond that. And of course, for them, going into North Africa and Egypt, etc., is an option. And then the other option is coming into South Asia. And that's something that we're seeing not only startups get interested in, but we're also seeing investors in those startups kind of like really excited about the opportunity that a market like Pakistan can offer, and looking for those kind of collaborations as well. Cal?
Yeah. So just to summarize, I think that to Misbah's point, I think we can look east and west for Pakistan in terms of potential exit opportunities. So west being, or I guess like northwest, whatever, is MENA. And in terms of Pakistan being so high friction and talent being such an issue that sometimes it's easier to think about a potential acquisition play or acqui-hire play rather than entering the market yourself. And then to Misbah's point on the east, mentioning China. Bangladesh doesn't really have that. They do have India. And obviously what we saw with ShopUp, for those who are familiar with ShopUp, it's a Dukan Tech play. ShopUp was able to do, because they received funding from Sequoia Surge from their India play, they actually did an acquisition with talent with an Indian player. And that actually was really unique and quite interesting. But so far, there hasn't really been further indication that that's necessarily going to happen in the future. But I think there is a lot more things that are open to Bangladesh from an India perspective than obviously we would ever have. I think there could be opportunity for them from a Southeast Asia potential, but that hasn't actually transpired yet. So it's just different markets when we think about the M&A potential that we're looking at versus Bangladesh. But I also think that the more there is potential collaboration between the two markets, where we can then expand our addressable markets of where these companies are growing to, I think that also will be something that will be quite exciting and something that's important to explore.
If this is the case, and China obviously seems to be a very important part of the whole valuation and exit and everything, because that's where the end investor has to focus, and even the start investor, because if that doesn't exist, then there is no point. But if that's the case, then why don't we see a lot of startups or companies coming into the money flow of CPEC in the freight area? For example, we have mobility, but why don't we have freight? Why don't we have trucking? Why don't we have anything related to the construction tech?
Funny you should ask that.
Funny you should ask. There's many companies coming into both those spaces.
That's
right
good.
now.
Yeah.
We've actually seen like a major influx.
Can we talk about it if that's not obviously not the specific companies, but what are the buy? Because here in the chart, I don't see anything, and that's a surprise to me.
Totally. So I think this is 2020. And so already what we've seen in the last 3 months of 2021 is an enormous amount of influx of trucking people in the freight space, which freight space, there were players that operated a couple years ago, people like FreightX and a few other players that were coming into that space anyway, Trucker based out of Karachi. But what we've seen is an acceleration. I think we've looked at 3 deals in the space in the last few months. But beyond that, Trella in the Middle East, as well as Trucker in the Middle East, have both raised between $20 to $30 million each, where Pakistan has allocated a significant chunk of that. So beyond the local players coming up in the space, we're also seeing outside players from MENA looking to enter Pakistan and raising a lot of money to do so. So I think that speaks to the need and the desire, as well as the opportunity to disrupt the freight space altogether. But Miss, am I missing anything there?
No, I think that's fine. I think in there's just a little bit more specifics on that, is that we're seeing different models in that. We're seeing the Uber for trucking model, which is very tech focused, that is looking at one sort of segment of the market. And then we're looking at a more of a relationship based model where it's like, let's bring in efficiencies into the players that are already in the space and help sort of align everyone. So there is a lot going on actually in trucking and freight.
That's actually pretty good to know, because to me that was like a space crying out loud for the money flow is there. There's a lot that needs to be happened there. So
and there's a lot of money for that as well. So we've seen a lot of funding go towards that.
In terms of any headwinds, and then we maybe move on to the next topic and talk about data a little bit. There's also a question around it, that what do you think are the key headwinds and challenges relative to the regional players? Obviously, China being a big quote unquote partner in this whole thing, and the reason why people invest in the exits and everything. But what are the challenges that we could face as an entire ecosystem that could put that inflection point either to a risk or can be a bigger and longer inflection point rather than a sudden one.
Misbah, do you want to
Charles,
go first?
should I? Yeah, sure. So I think one of the challenges right now, Hamad, is like we have to recognize that this is still a very nascent ecosystem, and a plug and play from other markets may not necessarily work over here. And that actually also goes for valuations and the kinds and the ways that funds are raised. So I think one question is like, you know, for startups that are looking to grow, we have to look at the local context as we're sort of, you know, growing that space. And so there tends to be this euphoria around a space, and then a lot of money sort of coming in, but that also sometimes a lot of those funds don't have local knowledge or local context. So I think it's important to keep an eye on the ball as far as that is concerned. I think one of the headwinds in Pakistan continues to be the fact that it's a high friction market with some areas which still need a lot of regulatory sort of easing up of that regulatory process and systems. And I think that's something that we need to continue to keep focus on, and that some of those areas need to be aligned. We have already seen some really great moves in the 2020, and some of us, you know, eye to eye and other partners in the space have been involved in working with the State Bank, with the SECP in bringing about some of these regulatory changes. And they've been really open, but I think there is still some way to go in terms of taxation and some other areas of opening up regulations a little bit. So I think that's something that's a challenge that we do need to see sort of things easing up a little bit or getting a little better there before suddenly everything is going to change.
Yeah,
Kals?
but that in itself is important, right? So when we speak about what are the potential risks for the inflection, the regulatory environment, ultimately, the way that there has been so many recent changes that have happened, specifically that's been allowed for by the SECP and the State Bank, that have allowed now to push, that it's creating a space that the rails for certain sectors, particularly fintech as an example, to be laid where we didn't really see real innovations happening in the fintech space before, or we saw fintech plays being really hindered by the regulatory environment. So I think, as you know, it's impossible to just speak about all of this micro level activity without also recognizing that the macro and the regulatory environment and those shifts will really allow for that ceiling to be risen, right? In terms of us being able to then get companies to the point where a China or a Chinese player would come in much later. So I think what's really important is that, you know, it's important for us to pay attention to the end game, which is how do we get exits, because that's important for every single one of the investors that are looking at this market and all of us who are operating there. But I think we also need to first say, like, okay, what are the things that are holding us back? And this is to the data point, right? We've only had one Series B just happen, but so many companies, as you can see in the graphic, so many companies, the majority of them are at seed, right? How can we ensure that the valley of death that used to happen in the space was between seed and Series A? We're seeing more companies now graduate to Series A, but how can we ensure that graduation continue to happen? How can we ensure that the investors that are operating, that there's a proper value chain that's taking place, so that we don't see great companies that have the potential for an exit later die early in these stages? So I think that also speaks to what even Misbah mentioned earlier. It really does take a village, right? It means that us as investors are also collaborative and co-investing together. It means that we're thinking about if this investor comes in now with a small check from an international perspective, will they come in with a larger check at Series A? So I think we think very strategically along those lines, especially looking at the data that we have in front of us.
In terms of the profitability, a lot of initial startups, and I think now probably that has changed slightly, came in the consumer space, and there was a lot of competition around it as well, and there were a lot of seeding and so forth. And what we have seen is a lot of international players also entered Pakistan as one of the markets to grow their numbers as well. Now, a lot of those ones have not been profitable, and that's not their game, the international ones, to be profitable there. Do you think that profitability is going to be an issue in the consumer space, because it has always been in every market pretty much?
Yeah. I think so, for certain sectors, right? Especially when we think about I think we've had VCs in other markets not pay as much attention to the unit economics over time of companies that they've invested in, particularly those that are consumer facing. So that oftentimes, like we'll see from a growth trajectory, companies just spending more and more money in terms of getting customers in the door as they grow, rather than actually thinking about how that spend is going down to actually improve the unit economics over time. And so I think that also speaks to the lack of profitability. Even when we look at players in the mobility space and all of that, I think Pakistan has less leeway, to be honest, than other markets, right? Because there's still so much risk associated with Pakistan that I think even when we invest in the consumer-facing companies, I think we as investors really pay attention to that of like, okay, even if the unit economics are not positive at this time, what are the things that we're putting in place to actually improve this, so that as this company grows, there really is that path to profitability. And obviously, not every VC fund cares about that as much as we do, but we personally came into this space to not be business as usual. So I do think that there is opportunities to be profitable, but I do think that also it speaks to, from a supply and demand or a push and pull perspective, that oftentimes VCs in other markets or even VCs in Pakistan haven't really cared as much about that in the past. I think that that conversation is shifting. But yeah, Miss.
And do you think that is a risk from an investment perspective, although it hasn't stopped any VC investing in any market yet? But I think, as you see, Pakistan already comes with a lot of ifs and buts and risks. And if profitability it continues to be an issue, which it will be in consumer-related businesses, then do you think that is a huge risk, or that is something that could be brushed under the carpet for a later stage investor?
Misbah, go ahead. We think a lot about this.
I think I think it's a bit of both, a bit of all sides, Hamad, because on one hand, if you're in this sort of spiral of continuing to raise more because you're spending so much and you're not really profitable, so it's only a one-way street, you have to have the ability to be able to continue to raise. And Kareem is an example in front of us, and Uber, of course, at now a parent company level, but we have those examples where profitability has not really held back these companies. But if they were not able to raise significant amounts of funds as they have been able to, then they would have actually been dead in the water. So I think that the challenge over here in the Pakistan context is that every company is not going to be able to do that, right? So all founders are not geared up for that. All business models are not geared up for that either. So I think there is this balance of and we're seeing it right now in Dukaan Tech in Pakistan, in the B2B Karyana space, where there are 5 or 6 players. A lot of them have been raising significant amounts of capital. Some of them are more capital efficient than others. But at this point, there's a lot of money being pumped into the space. And so I think in the medium term, the question is going to be, which of these players are going to continue to attract those funds, because they are still showing growth. I mean, anybody can give a discount and get customers, but how do you hold on to that customer? How are you actually giving value to that customer? And that may not be a concern in the really short term, because you're able to sort of build on the hype and continue to raise money. But I think in the medium term, it catches up with you. In the long term, obviously, it's binary. Either you'll do really well or you'll die if you're just not making any money and you're just throwing money, investors, other people's money at the problem.
Yeah.
So I think there's Charles?
No. The only thing I was going to add was also in Dukaan Tech, there's been a few plays in the Kata space, specifically similar to what we saw with Kata Book in India and Bukukas in Indonesia. And I think that play specifically, because it's more about, first of all, getting just an overall volume of users in the door first. In Kata Book's case, they didn't even think about monetization until maybe their Series B, right? And they had the luxury of doing that because India has so many funders that will just fund deals that don't have monetization, right? Pakistan doesn't have that same luxury. So if we see plays coming up in the Pakistan space that are like that, what's really important for us as early investors, and eye-to-eye sweet spot is really pre-seed and seed, right? Is that we have to help that play actually create a monetization strategy, run a pilot, actually figure things out before Series A. So I think the pressure on local investors, because we know the market better than international investors do. We're on the ground and we see things for the way they are. We know that luxury doesn't exist. So our pressure on ourselves, and maybe this is me just speaking for us at eye-to-eye Ventures, is that even if a company doesn't have that monetization strategy yet, because it's more focused on user volume, we need to get to that monetization strategy much more faster than our counterparts in similar markets.
Which industries do you think in this chart lend themselves to the profitabilities earlier on in their trajectory than later? And then we'll move on to some questions that people have asked as well, which could be relevant to the overall discussion. So some industries, for example, consumer tech, we know is very difficult profitability wise, and that's worldwide. And that's a problem. Personally, I think that is a problem in the longer run, because a lot of the players may or may not survive. But what industries in this chart lend themselves a little bit more to profitability early on in the career? Because that's something that I think you mentioned you focus on early on before the next round, which I think is a great thing.
Yeah, I think fintech is well positioned just because of the nature of the business, being sort of focusing on building through those margins. I think the challenge in fintech is something else. It's not necessarily profitability. It's more about how do you grow the book? How do you actually have a balance sheet that can support the growth that your company needs? And of course, there are different ways to do that. So I think fintech is one where there is, you starting off with a business model that actually might be viable from the get-go. I think the other thing is obviously SaaS, which can be, and again, Pakistan is not an outlier. The SaaS opportunity in Pakistan is the same as a lot of other markets, so it's kind of like good, solid sort of revenue coming in. I think interestingly, what's a challenge in Pakistan more than profitability, Hamad, I would say is customer and consumer adoption. Because I think what we've seen is there are some great plays in health tech, in ed tech, that sound really interesting. But the question is, are people actually going to put money out and sort of put money out for them? And I think that's something that we've been looking at as well as we looked at different sectors. And in fact, speaking about data, one of the things that our sister company's Insights team really helps us do is work with us pre-investment to really dig in and understand the market dynamics of a potential opportunity. How big is it? How big can it be? What are some of the models that have worked in other markets, so that we're able to come in with informed decisions around the potential of a business model within a sector, and keep an eye on not just profitability at day zero, but where how those trajectories have gone. To Kalsoom's example about Khata Book in India, for example. The other thing that we do is that we actually, once we invest in a company, we actually work really closely with them to help them figure out some of these things. And I think to Kalsoom's earlier point about unit economics, about understanding user behavior, about engaging with your your first users and really understanding what those user personas are, what are they looking for, how are they actually working, is something where we can actually come in and leverage not only our collective knowledge, but also our Insights team, again, on our sister company side. And in fact, giving an example of one of our portfolio companies, which is TeloTalk, which is a localized messenger, Pakistan ka apna messenger. Their localized messaging platform in Urdu, English, but also regional languages. They've been growing pretty fast, and they've had significant growth in the last year or so. And one of the things that we were able to help them with was really dig into their super users and engage with them and understand what are they looking for and what are they expecting from the app, and what would they really like to see. And as part of that engagement, the company was actually able to focus on certain products versus others. They launched chat rooms, they launched a stories feature, and now some of those have proved actually the stickiest for them in terms of users. And that path to profitability just becomes a lot easier because you have much better knowledge about not only your customers, but also focusing on unit economics alongside that. So I think it's less about like off the bat what's going to be super profitable, and part of it is actually working to dig in before you make the investment, and then also after you make the investment, and that's kind of coming back to the data aspect of things also, where we sort of work with our portfolio companies.
Yeah, I'll make one last comment on that, because as Misbah mentioned, we can't just speak in sweeping gestures about sectors, because I think it's more the entry point within the sector, right? So as Misbah mentioned, it's fintech, but like not every fintech play is going to be a profitable play, right? Because also to user adoption perspective in Pakistan, We've seen that cash is still very much king, right? So credit cards and credit card adoption is still relatively low. So the entry point for a fintech play where there is path to profitability might be a different play. It might be something that's more similar to what PayActive has done, who's obviously Safwan has done a talk here with the Pak Launch community. In the education technology space, as an example, the B2B play is not necessarily a path to profitability because in terms of overall adoption of schools is really difficult, but we've seen overall like an exam prep angle, especially with high school students, be quite an interesting entry point, right? Because we see that they're the ones that are typically, high school students are typically the ones that are making their actual tuition decisions compared to parents. There's a lot of like really interesting things that our research team has actually worked on that allows us to be very specific when we make a play, because we're like, okay, it's actually not edtech as a whole. It's going to be this very specific play. And within that specific play, it's going to be this entry point. And this is the path that we decide to go into with the company. So I think because not only are we're closing our 5th deal right now. We've done 4 companies. We're about to do our 5th, sorry. But when we've done all of those things, I think what's really important from IDI Ventures is that we're not always the biggest investor in a round, but we are oftentimes considered a very strategic investor because of that after investment support that we provide. And because of that, we work so closely hand in hand with our companies, as Misbah mentioned with Teletalk, but now we're doing it with all of our portfolio companies on that specific issue and question that tends to really come up in the seed stage.
A couple of questions from an investment perspective. So we obviously in this forum and beyond, everybody talks about investing in Pakistan, and there are hurdles, there are monetary hurdles, regulatory hurdles, and every kind of hurdles there. Is there a way of crowdsourcing where a number of people can bunch up and then have smaller ticket sizes to invest in particular startups as a co-investor or directly in a fund? What are your views of what were the things going around it? For example, here, even on this forum right now, there are multiple people thinking about, I know of multiple people even on this call right now who think about these things, but they don't find the avenues to do that. For example, some company raising some seed round, coming through you and you informing a bunch of these people who can pitch in as well. Is there such a thing that can happen or is happening?
Yeah. Go ahead,
sure. One of the things that we're seeing in the space broadly, Hamad, is that people are clubbing together and looking at angel syndicates, and that's more with like a few people sort of pooling in resources and looking at deals together. I think for us, what a lot of the LPs in our fund have actually done is invested with us because that allows them to have an eye on some of the deals coming in and then co-invest even, double down even more if they need to. So that option is always there. To sort of come in as an LP, have some eyes on deals, and then obviously get engaged further where there is an opportunity to do that. And then obviously that supplemented co-investment can actually be part of that round as well. So that's something that is also an option. I think increasingly we're starting to see people are. And I see Ali saying that there are 4 angel syndicates within Pak Launch. So yeah, we've spoken to a few of them as well, and I think increasingly as people are starting to understand where Pakistan is at, and of course as the opportunity is maturing a little bit more as well, people are definitely getting more interested. And I think it's great for us because we feel like the more people that are getting involved, the better the market is going to be, because it offers options for founders. And I think increasingly we're starting to see most of us are collaborative in this space. We like bringing in other funds, other investors, and we like working with people. And at I2I, we also acknowledge that we don't know everything. So we would love to be able to engage with people that want to come in as co-investors and bring something to the table where the startup is ultimately benefiting from that expertise and investment. Just one thing that I would actually suggest is that if you are outside and you are looking in, it's always great to engage with people that are actually on the ground. Whether you decide to invest with them or not is a different thing. Obviously, everybody has different reasonings and choices. But I think it's important to keep in mind that you should try and get as much information for people that are on the ground as possible. If there are if you know of other investors that are looking at a deal, reach out to them. Most of us are very happy to have conversations with people that might be interested in a deal and can share more color on what it's like from being on the ground perspective. Because I think, again, coming back to Pakistan and how the market is, it is very relational, and it is a kind of a lot of stuff happens in terms of understanding the space that people are working within, but at the same time, there are those of us that are on the ground that really do have on ground knowledge, and I2I is not the only ones. There are other funds as well. So I would just encourage people to reach out if they're interested.
One question that came up, and that's very, very obvious on this chart right in front of us as well, only $1.8 million raised by women-led startups. Why? Why is it so?
How much time do you have for us to discuss the unconscious bias that exists for women raising funding
on the eve of Women's Day, no less.
International Women's Day tomorrow, yes. So I think what's interesting is there's a few things, and again, our study that we released in 2019 actually took a gender lens in our analysis. So we actually go pretty deep into why this is the case, as well as what to do as a result. And actually, our sister entity is now working with the World Bank on the implementation of some of the findings that we have from that study now. So we have 2 programs that are going on right now. So the major issue here is that Pakistan reflects global statistics that we're seeing, is that overall companies, this is what I have here is 2020, which is 6% of the total deals in 2020, but from 2015 to 2020, female-led, female-founded or co-founded companies in Pakistan only raised about 3% of the total. So when it's over 200 million, they only raised about 3% of that. So in the past year, what's been really interesting is that I don't think we saw that much of an improvement, but we did see the biggest challenge that occurred was that we didn't see enough women-led companies raising. We still have not seen a Series A by a woman-led company yet. Raised yet. We also saw them mostly raise pre-seed, angel, or seed stage, and not really graduate beyond that. In the past year, between AimFit, Gallery, and Co-Natural, and even Dot and Line, we saw female-founded and co-founded companies actually raise more average in terms of their actual deals were larger than what we were seeing before. So that is a positive. The other issue that came up a lot, so 2 things that came up in the study. Number 1 was that when we interviewed investors in the study, because we basically took the data that we gathered and then we talked to investors as well, 75% of the investors that we interviewed said that they did not see a difference in the quality between companies that were founded or co-founded by women and companies that were founded by male teams, but they didn't see enough female-led companies. So I think that's one reality, is that there's not enough. The quantum of female-led companies raising capital specifically is not a lot, which is actually one initiative that we've been doing with the World Bank over the last year, has been on that as a response to that. The second issue is, as we talk about them raising smaller amounts of capital but not graduating to Series A, is 2 issues. Number 1 is that most of the types of investors that are in the Pakistan market are not necessarily, they don't reflect the diversity of funders that are needed for all types of companies, including female-led companies, because not all female-founded and co-founded companies are going to raise or will need venture financing. They can, use different instruments like convertible note, revenue-based financing, venture debt, and there's not really, besides Zain Capital, there are not really any players that are necessarily doing that. So there needs to be an overall diversity of funders and an increase in that. And secondly, which just speaks to another initiative on our sister entity that we're doing with the World Bank, which is very specifically a coaching program for companies that are raising capital and really getting them over the finish line and connecting them to different types of investors and all of that. So I believe, and I think we believe, that it's important we want to shift that number. I2I Ventures doesn't only invest in female-led companies, but we are really passionate and passionately activist about being as inclusive as possible. 3 out of our 5 deals that haven't yet been announced are female co-founded companies, which is great. But we know that it's important for that number to continue to shift. Go ahead, Miss, if you have anything to add.
I was trying to answer some of the questions while you were talking, like you were doing when I was chatting, because
I know we were
there's a lot there.
There are a lot of questions. I was just going through some of the common themes. I think a lot of the themes do reflect upon the ways to invest. Maybe we touch a little bit around that as well. So because you've already written your emails and everything there, so I'll take it as an opportunity to just announce if people can just look at the chat. Kalsoom and Misbah have shared their email addresses. They're also available on LinkedIn. So if we couldn't take up your question or you have something later to share or reach out directly, please reach out to them. They are open for questioning or any collaboration or any reaching out. Maybe the last couple of things should revolve around your fund and how people invest in it and what are the deals that you're looking at and how the LPs can actually benefit, maybe versus what others do.
Sure. I'm going to stop sharing my screen actually to make it, because I keep going, I think. Yeah, I mean, Misbah, what would you say? I mean, I'm happy to go first, but also.
Go ahead.
Yeah, I mean, I think that, we're all I would say that we're all collaborators and partners and colleagues in the space, the VC funds that are operating there. I do think that our biggest muscle that IDI has is the 10 years of experience that we've had in the market. And it's not something that, we're just using as a stepping stone. It's something that continues to evolve as we inform, the fund informs what happens on the sister entity and vice versa. So I think we do have a really interesting exposure to pipeline that others may not always have in terms of even just companies that are coming through these various support programs that we do. But I also think, to be honest, I know that it's really unique having a research team that can be seconded to our portfolio companies at the stage that our companies are at. Those user insights, to me, I think are some of the most valuable things that we provide as investors, right? I think every other VC fund comes with their own network. They come with a different approach to what they're doing, the types of companies that they look at. I really do think that, when we talk to our portfolio companies and when we speak to other players in this space, our biggest value has been that research side and also just getting hands in with our companies, right? Like we're involved in hiring for their early teams. We're involved in Misbah has a ton of amazing background and foresight into so many things, but she comes from a fintech perspective, right? A lot of times. And so can provide like really interesting lenses that maybe some other people can't. And so I think our market knowledge and ground level knowledge is probably one of the biggest assets that we do bring to the table and continue to evolve and I think grow because we don't believe in just saying that we do this and we're done. We are constantly trying to make our offering better because we realize how important it is to be founder friendly goes so much beyond us saying that we're founder friendly. It's really kind of delivering on that to the founders. Misbah, do you have anything to add?
No, I think, I think that kind of covers it. One other thing, the only thing I would say is that, we do like to look at an evidence-based approach in how we invest. Of course, we're early stage funders, so we recognize that a lot of times, there may not be as much traction to sort of have, a very solid sort of trajectory in terms of where this company is going. So there is a little bit of, inshallah and fingers crossed there. But I think what we also, like Kalsoom said, we really focus on the founders first and foremost, and then the size of the market opportunity and what problem they're actually looking to solve. And with that, with those sort of two things that are driving us, I think it becomes a little easy for us to sort of see, have a vision about where a company could go, and then use what data we have to then supplement that, and then understand where something could happen. So one of the questions that came on the chat also was like, how much information do we need from a company that is approaching us for investment? And I think that's really at the early stage, it is a bit of a challenge because you don't have as much trajectory, as much attraction as you would if you were a Series A or a Series B company. So at pre-seed, there's almost none, and at seed, there is some as well. So I think for us also that triangulation of data around other markets, what we think the founder's vision is, what we know from our experience, what we can leverage our networks for is really important as we make those decisions. And I know that some of the other funds do that as well, and some don't. So people do have different approaches. That's another thing that does set us apart.
And we're women. I don't know if that helps, but like the supposedly global statistics say that female fund managers return better than our male counterparts. So we'll see inshallah if that's the case for us. But I mean, being women, I guess, does make us different in a positive way.
Actually, I did that study myself as well, so I can corroborate that.
Yes. Thanks.
Great, thank you.
Hopefully we fulfill that. We've definitely behaved. One of our portfolio companies said this to us, that we behave like founders ourselves. We have a lot to prove. So I think that type of work ethic that Misbah and I really approach this with is something that I hope impresses our LPs as well.
Yeah, and speaking of data, there is actual data to support that. Don't just take it from us. We'll be happy to share, share actual studies and actual data that confirms that. So speaking of, since we are focusing on data in this session.
Thank you very much, Misbah and Kalsoom. This has been a great, enlightening session. I think the data part, absolutely amazing. The work that you guys are doing, and please keep sharing it. I think we can all learn a lot from that, and it bodes well for all of us. I don't think anybody else is doing this deal flow thing. I keep an eye on it whenever you guys share it in the groups and so forth. Yeah. So please keep sharing. And we have run out of time, but there are a lot of things to talk about. Maybe we'll have a follow-up session targeting on some things further. But if anybody please wants to reach out to Misbah, to Kalsoom, they're available on LinkedIn. Their emails are also in the chat, which will disappear when we obviously stop it, but they are in LinkedIn as well. Thank you very much for your time,
the chat,
for everybody, especially on a Sunday.
Yeah, thank you so much, Hamad. Thank you to Ali as well and the whole POC launch team, and for everyone being here today.
Take care.
Thanks, everyone.
Nafis.
Nafis.